Hi guys, and welcome back. If you are new to the channel, please do hit that subscribe button and tap the bell icon so that you don't miss any of the free content as I share with the trading community here on YouTube. So let me ask you a quick question. Do you ever feel like you're going back and forth within your trading? Do you ever feel like it's 2 steps forwards, 2 steps back, and just repeat? If so, I'm hoping that I can solve the problem for you today. And at the very least, I'm going to try my best to do so and to add as much value for you all as I can. So let's dive in. Now, if you are feeling like you're stuck, and again, you're going back and forth within your trading, my guess would be that this might be because of one of 2 things, or maybe even both of these 2 things. So number 1, edge, i.e. wins outsizing losses in line with your win rate, and so on. Or 2, mistakes, i.e. self-sabotage, so skipping trades, moving your stop loss or target, exiting early, and so on and so forth. So let's start with reason number 1. Let's dive straight in, and we'll say that your wins aren't outsizing your losses. So you're perhaps taking, let's say, 2 or 3 -1R losses, and then you're having a 2R or a 3R win. And then you're taking another 1 or 2 -1R losses, and then having a 3R or a 4R win, and so on. And you're pretty much just hovering around break even, right? Now, it's not quite as black and white as that, is it? And both win size and win rates play a part here. So let's take a look at 2 examples together. Example 1. Let's say your strategy's win rate hovers around 50%. This would mean that on average, you're going to need to win a minimum approximate 1.5R when you write, if not higher, to consistently make money. So why is this? Well, if we take 50 -1R losses, that's minus 50R. If we take 50 1.5R wins, that gives us 75R. And of course, that leaves us with 25R profit. As we all know, again, it's never quite that black and white, and the win rate will of course rise during certain times and fall during certain other times as probabilities play out. But overall, you will clearly make money long term based on the law of large numbers. That's a statistical fact. The real question is, can you execute long term as the probabilities are actually allowed to play out? And if we take a very quick look at this probabilities table that I'll bring on screen for you, you can actually see here that on the left hand side, if you look at strike rate for strategy at 50%, you'll see that there's a 100% chance of 2 losses in a row. There's a 99.8% chance of 3 losses in a row, and on as you move across the table. So there's actually a 50.6% chance that at some point, you're going to actually have 6 losses in a row. So why do I mention that? Well, it's important to know that that is going to take place at some time. And sometimes just knowing that can ease things a little bit and give you confidence when that losing run does actually come around. So example number 2, let's say your strategy's win rate is hovering around a pretty low 30%. So this means that on average, you're going to need to win a minimum approximate 3R or above when you write to consistently make money. So again, let's look at an example here. 70 losses at -1R is of course minus 70R. 30 wins at 3R is of course 90R, and therefore you're left with a profit of 30R. Again, as we all know, it's never quite that black and white, is it? And the win rate will of course, again, rise during certain times and fall during certain other times as probabilities play out. But overall, you will clearly make money long term, again, based on the law of large numbers. That's a statistical fact. Also, just very quickly, if you're enjoying the video today, it'd be great if you take just a quick second to hit the like button and maybe leave a comment as well. That'd really help me if that's okay with you. And we've actually just experienced a pretty huge example of the power of wins outsizing losses via the DAX strategy this week with a trade that was within touching distance of a pretty huge 20R. Let me show you the trade itself. So here we are on Tuesday's DAX chart, and using the DAX strategy, we were given 2 trades here. So the first of which was here, triggered long with a stop below the low. We were then stopped out on this before being given our second entry here, again, triggered long with a stop below the low. just following the usual set of strategy rules. And if I just zoom out here, I'll show you where the DAX strategy told us to place a target that day. And for those that don't know this, the strategy is completely mechanical and it tells us exactly where to get in, where to place a stop loss, and where to place a target. So if you did have the rules for the strategy, you were presented with this exact trade. Now, I don't need to spell this out for you. You can see how large a trade this was firsthand, but put it this way. You could have had 5, 10, even more than 10 losses in a row. And with this one single trade, your account was pushed way, way ahead and way into profit. That's the power of edge. That's the power of a strategy like this that only ever delivers 3 types of trades. So small losses, small to medium sized wins, and extremely large year-making wins, which is what we've just had this week. And with that alone, think about it. If your losses are capped at a really small, manageable -1R, and yet wins are 3R, 5R, 10R, 15R and above, it is a literal statistical fact that you're profitable. You cannot not make money using this strategy, as long as you follow the rules and take every trade, of course. And that leads us really well into reason number 2, why you might be stuck feeling like you're going back and forth, so to speak. And that's due to self-sabotage. Now, when it comes to that monumental DAX trade that we've just covered, when that hit target, I was chatting to a few of the traders I work with, and this issue, self-sabotage, showed up yet again. And I actually wanted to share a few pieces of actual feedback that I received from these guys yesterday. So one piece of feedback being from this trader, obviously I won't name him, but thanks to having followed the strategy rules, he was of course celebrating the win, as you can see. Fantastic. And that's how it should be. You take the strategy rules, you follow these, you take the trades that you're presented with and told to take, you leave the trade alone, and you bank the profit. Brilliant. Another piece of feedback here, and this is where self-sabotage started to show itself. Again, I won't name names, but as you can read here on screen, this guy adjusted his stop loss to, as he says himself, lock in some profits. And in the end, tampering with the trade meant he only took 7R from that huge move. The market came back on him, took his stop loss, and then shot right up the target. Again, this trader cost himself the other half of that trade, not due to the strategy, but actually due to him, his actions, his decision. And as he says himself, he's learned the lesson, thankfully. So hopefully the next time that one of these year-making trades comes along, he'll know not to do that again. Another piece of feedback here from this trader who executed slightly late, exited slightly early, and although he still banked a very, very large win, adding just below £200 to the bank balance in that one trade, as you can see from the screenshot he sent me from his broker, this is self-sabotage slowly beginning to creep in. So think of it this way. If you execute late and you exit early and miss out on, let's say, 5 points of profit on each trade, that might not seem like much on a trade-by-trade basis, but over, let's say, 100 trades, that's 500 points of profit missed out on, isn't it? Which is why it's so important to execute well, leave trades alone, trade right up to target, and on and on. Again, not detrimental by any means, in that he still banked a massive win, 115 points made on that trade. And that's the kind of move that very, very few traders ever capture, because they're trading without edge. But again, there's still elements of self-sabotage there that really need to be nipped in the bud now. Another example was actually a trader who painfully had to admit that she skipped the trade due to, in the end, nothing but fear. She just didn't think that the trade would be a win. And I can't share her email because it's got some personal info mentioned in it, but I'm sure that you get the point. The trades are there to be taken, but the point is this: it's often the traders themselves who simply self-sabotage, unfortunately. They execute late, they exit early, they move their stop loss around, they move their targets around. They even, at times, as I've just said, choose not to take certain trades that their strategy tells them to take, and so on, purely out of guesswork, really. And it's this that causes traders to go back and forth, staying stuck in the middle, struggling to make progress. So if you are someone who saw the title of this video and said, yes, My question for you would be, are you doing any of what we've actually just discussed? If you are, then you now know exactly why you're going back and forth, and that's due to the mistakes themselves. So what's the solution here? Obviously, it's to fix and remove the mistakes, right? So how do we do this? Firstly, we need to start by actually identifying the mistakes. You can't fix what you don't know is broken, right? So ask yourself, are you making any of the mistakes that we've just covered? If you're struggling to commit to your strategy, one useful example is looking back on past trade data to increase confidence. So comb back through your past trade records, see the wins playing out, see the profitable trades coming through time and again, and trade with confidence, knowing more will follow just as they have through the past. Also, keep a record of mistakes made. Again, identify these, i.e. I moved my stop and I lost out on 5R, or I exited early and I lost out on, let's say, 3R, etc. And monitor these regularly with the aim of removing them now before they cause any more damage. As a helping hand, I also wanted to share 2 helpful resources with you all that you can find in the description of the video. And these include my version of Tom Pickens' Demon Finder. Big thank you for Tom for inspiring this and originally putting it together. It's an incredibly useful tool that I always find myself recommending to lots of traders that I work with to make use of. And secondly, I've also added a blank copy of a trade record for you all to, again, find those in the description, get them downloaded, and hopefully they'll help. So there you have it. Ask yourself, is the reason for being stuck any of the mistakes that we've just covered? Do you miss the extremely large wins that were presented to you by your strategy? Do you adjust your stop or your target and then miss out on profits? Do you execute badly? If so, you now know why you aren't progressing as quickly as you perhaps should be. Next step, fix the issues, use the resources that I've shared, and start achieving what you know that you can. Anyway, I hope that helps. I hope that's triggered some inspiration. I'll leave it there for today. And as always, guys, trade with edge, with confidence, and I'll look forward to having you back here on the channel soon. Thanks, everyone.